Hello everybody, what's up? This is DSM. As I promised before, I wanted to share with you a couple of tips about how to grow a small account trading stocks. So, if you watch my previous video, you might remember I showed you a picture of my small account. I traded for 2 weeks with $5,000 and I made 1300 or 1400, something like that, in 2 weeks. My biggest loss was SLS 1000 share long on October 17th, and $7 loss on Tesla long on October 25th. So, and my biggest gain was PTI 500 shares short on October 24th, and another one on TLRY. So I get back to this. I just wanted to give you a hint before I started this analysis. But before I get into that, as I said, you know me because I am the founder of Daily Stock Money chat room, and you are watching this video because you are one of our members, and I would say lucky members, because these materials and contents I'm sharing with you, nobody else in this industry, as far as I know, uh, nobody is telling this stuff to their members. And that's why they have members in their chat room who are trading for years and they are still under PDT rule. So it's it tells what it has to tell you, because in the next slide I want to show you, if you have 2500 in your account and you just make 20% per month, and based on our trades or um, other people trades in their chat room, 20% is nothing. They post trades with 50%, 60% gain, and their members are still under PDT rule. As you see, with 2500, 20% gain, after 1 year you have to pass PDT rule. If you start with $5,000 in your account, you just need to make 15% each month to pass the PDT rule. And if you have 7,500 in your account, you only just need 10% gain each month, and after 12 months you pass the PDT rule. So it's nothing, and it's very easy. And those who claim they have millionaire students, but their members and those traders in their chat room, they cannot pass PDT rule after 1 year, there is a big fundamental problem with their trading system. So let's get back to the main question. How to not waste your 3 trades per week. Based on PDT rule, you have 3 trades in 5 business days, which is 3 trades in 1 week. So the answer is don't use them. So some people would say, what the heck are you talking about? So if your strategy is, or your coach or mentor tells you, you have to trade the best 3 stocks in the week, so it's not gonna work. I am telling you, you know that it's not gonna work. You use your trade on, imagine on Monday, you buy something in the morning, the trade doesn't work, you don't, in best case scenario, you don't want to lose money and you get out of the trade and you just lost one of your uh, shots. out of these three trades for nothing. And you use the second one in Tuesday and the third one in Wednesday, and you see perfect opportunity on Thursday and you cannot trade. And if you take that trade, you are taking huge risk, because if you want to get out of that trade that you took at the end of the week without having any day trades left in your account, you set up yourself for a big loss. Because if you get out, uh, you get 90 days penalty in your account. And if you don't get out, if something goes wrong, you have to eat big losses. And that's why uh, these traders in other chat rooms, they cannot grow their small account. So I don't want this to happen for our members. Because of that, I'm going to share with you my experience in past couple of years. I did that, I repeated that. I'm going to repeat that again for you. You can see my trades in small account channel, and all the time I want to answer your questions and help you to pass this small account restrictions. So as I said, in order to not waste your three trades, you have to plan to not use them. So how to not use those trades is the key. So the first secret is don't focus on day trading strategies. Focus more on swing trade opportunities. So when you basically design your trading system, when you have a small account, when you think about swing trade opportunities, not day trading opportunities. Day trading is like you buy something or you short something and you want to sell or cover the same day you went long or you went short. So that just kills one of your three trades in a week. And if you are lucky, you get a small percentage on that trade, and you have to wait for next week to trade again. And usually, you know that, I know that, um, it's very, very rare, and it's not common to find home runs when you want to do day trade. When you are doing focusing on day trading strategies, usually you uh, buy breakouts and you want to I don't know, short at the top or this type of things. So um, the chance for these type of trades to go wrong is very high. And when you don't have um, the luxury of getting in and out of trades as many times as you want, these strategies are not fit with your current situation. So my suggestion is focus on swing trades, because when you want to buy something, for example, and leave it there for the next 2 3 days, um, the chance for you to not use your day trade is very high. You still have your day trade. If everything goes wrong and you just want to get out of the trade immediately, you can use that. But your main plan is not to use that day trade. Just leave the position and let the trade works in next couple of days. or maybe a week. So I'm not telling you to not do day trading. I'm telling you you have to focus more on swing trades. There is another reason for that is usually those who are trading with a small account, they are not full-time traders. So when you are not a full-time trader, you don't have the time all day to sit in front of your monitor and check the stocks going up and down, get in, get out. So this is another reason that I think focusing on swing trade opportunities is better for those who are trading with a small account. So my suggestion is, for example, if you have $6,000 account, you dedicate $4,000 of that account for swing trades, long and shorts, and $2,000 for day trading. In this case, you don't lose anything. You have a couple of swing trade ideas, and you also have $2,000, one third of your account, in case something special happens and I don't know, there is a perfect setup for day trading. And you get in and you take that chunk of money in your day trade and then you go back to your swing trade ideas. So, this was the first tip. The second tip is don't focus on long setups. The chance for winning in long setups are lower. Some of you might say, what? So let me explain it for you. So long setups usually happens um, when, for example, you um, wake up, you see a couple of alerts, you check the market, and somebody says, "Yeah, this is a good news about this company and that company. It's pre-market or at the open. There are a couple of things happens, and you just want to get in because you have this fear of missing out. So you get in, and the trade goes down like the one I did on Tesla or SLS. Because I had a small account, when I see, for example, I have 1,000 shares of SLS and I bought it at $2.03 and it crashed to 190, and I didn't want to wait for the stock to go to 180, 160s and 150 and lower than that. I just got out, and then the stock started to ramp back up and it went to 250 something on that day. You can go and check October 17th, 2018. So I just missed one of my day trading opportunities. And the problem was when I went long, I didn't know exactly this stock is going up or it's something, it's just the excitement at the open, or I didn't know what's going on. I thought, and it was perfect breakout when I bought the stock. It started to test $2 and it already broke $2, and I started to test that and I thought, okay, 2 is a good support. So I went long and the stock started to going down. So I decided to take $100 loss, because if the stock crashes, you already lost one of your trades and you have to take bigger loss. And when you invest $2,000 and if you lose $200, it's 10% loss, and it seems it's stupid. So I decided to take 5% loss and get out. But when I say you don't need to be worried about long setups is if you let the trade the chart plays. For example, if you let the stock run, make the higher high and peak out at some point, and you see the confirmation for the backside of the move, which is when the stock cannot go higher, goes for correction, and the correction, the bounce is weak, and you see, for example, the stock goes higher, one bounce, and it cannot test the higher high, make the higher high, or test the previous high, and it started to go down. Then you get in, and you are kind of sure you don't need to be worried about the stock unless it starts to create a breakout. So you just leave the stock, and you can leave it there for 2 3 days to come down, and you take your profit. So as an example, I I had VTVT long after hour on, when was it, October 16th, and I went long. The stock went higher and higher. It started to create a, it went for correction, and it has started to create a base. Because I was not trading with a small account, I was sure, okay, I can add here, and if the stock goes down, I get out break even. But if you are trading with a small account, you don't have the luxury of these guessing games. The stock goes higher, you already buy here. When you see this, you don't have the chance to add to your position, because if you add to your position and you want to get out of that position, you took two of your trades. Based on PDT rule, you can have uh, one opening. For example, if you buy the stock and you want to close it in two sessions, two separate orders, it still is one day trade. But if you have two openings, which means you buy here and you add to your position here, and you want to get out, for example, at 4, the day trading rule says this is 2 day trades. You have one buy here, and you sold that position here, and you have another buy here, and you sold that position here. So these type of trades, it's very hard for those who are trading with a small account. You have, in order to go long, you have, imagine you have just one chance. For example, if you see the stock is going higher, you have to take your full position here, because you don't want to waste your day trading opportunities. And it makes basically the trade more riskier than when you let the stock run and you see the top, for example, in TLRY, you see it topped out, peaked out, and started to give you a confirmation. Then you say, okay, it goes down and it goes up, and you know the history of the stock, you know the daily chart. You take one position here, and because you saw the history, you saw the previous chart, you let the stock do whatever it wants. You let the chart goes high as it can, and when you get that confirmation, you get in with short position and you just let it run. As you can see, TLRY, I shorted this from 155 something, and it went to 132, and it crashed to 100, another $32. So I mean, if you understand the shorting setup, short setups, and shorting trades, uh, you have more chance if you integrate that with your swing trade ideas. See, I shorted this here on this day, on Monday, October 1st, no, 21st, and I covered at Monday, no, it was Friday, and then I covered it at Monday, October 22nd. I didn't use any um, trading, day trading opportunities, and it paid a lot for this small account. So, and I had the luxury to wait a little bit more longer, and it went to 100. I could double my profit, and it was easy because I I knew the stock already ran a lot, and now it's time for this to go down. So that was the second tip about don't focus on long setup. Try to find short setup and integrate that to your swing trading system. So the third uh, tip is sorry. The third tip is trade with smaller size. This is something that I don't know, maybe conventional wisdom tells you to be more aggressive, go all in when you have a small account. But if you integrate this trick or tip, whatever you want to call it, this concept with past two concepts I told you, this gives you the most maximum basically profit in your small account, because when you have a swing trading plan for a stock, you already saw the stock, you already targeted the stock, and as I said, you didn't go long, you let the stock run. And for example, the stock started from here, it goes higher and higher, and you see, okay, it starts to topping out, you get the confirmation, and you know it's going down. So you have this plan for swing trade this stock in short side. So one of the things that helps you to take the maximum profit is not going with big size or bigger position that you can go. Start to take very small position, because the main important thing is you have to be patient for the stock to sell off, and you want to let the stock to uh, go as minimum as you can. For example, you identified the support and you are waiting for the stock. When you have very small position, it helps you to be more patient, and patience is the key, which is uh, one of the keys you heard from every single famous trader from 50 years ago till a decade ago. Everybody in a stock market, they tell you uh, being patient is the key to success in this business. So, in order for you to be patient, and you have to get rid of emotional situations or getting panicked in a special type of trades. So for that reason, you have to trade with a smaller size, and you will see. If you do that, you will see this gives you the most amount of money in a trade that is possible. So, as I said, if you use these three secrets for growing your small account, um, in my opinion, you can make more than 25,000 at the end of 1 year day trading or trading with very small account, as I showed you with 2,500 or $5,000 or $7,500. So remember this. Don't focus uh, on day trading. Sorry, I have typos here. On day trading setups, look for short swing setups more than long side, and trade with a smaller position size. So as I said, if you understand the logics of these 3 points, you are on the right track to grow your small account and make a lot of money very quick. So let me know if you have any questions. As I said, I just wanted to share this video with our members, and in our small account challenge, I'm going to answer all your questions about how to trade with a small account. And if you are a US resident, you have to follow these rules. This rule because PDT rule is just for US residents, and if you are out of US, you don't have any problem. Except you still need to have a solid trading plan and find strategies that fit with your trading style and with your trading system. So that was it. Hopefully, you learned these things and you can utilize them in your trading system very soon. Um, have a good day. See you everybody in the chat room tomorrow.